We all want to make games as indie developers. That's awesome. That's genuinely cool. But here's the part nobody likes talking about. The law exists. Taxes exist. Paperwork exists. And if you seriously piss off the IRS, you're not going to be worrying about game design. You're going to be worrying about notices, penalties, and whether your bank account still works. So today I'm going to give you 5 ways indie devs accidentally commit tax fraud. Not because they're malicious, but because they're sloppy. Let's go. Number 1, the big one, underreporting. This is the worst mistake. Full stop. I don't care if it was a hobby. I don't care if it was just a little money. If you made $400 or more in net self-employment income, you are legally required to report it. Platforms usually send a 1099 NEC at $600. Some platforms, I don't know if that's true, but the legal reporting requirement starts at $400. Those are two different things. If Steam or itch.io don't send you a form, that does not mean the income disappears. You are still required to report it to yourself. Because you know why? The IRS already has your numbers. Payment processors report gross receipts. Platforms report payouts. Banks report deposits. So when your tax return says 0 and the IRS database says otherwise, that's called an income mismatch, and that's how audits starts. Not because you owe a lot, but because the numbers don't line up. All right, this one pisses me off the most. The TikTok guru special, false deductions. This one gets people whipped slowly. Deductions must be ordinary, necessary, primarily used for business. Primarily is doing a lot of fucking work there. If you use your PC 50-50 for gaming and work, you don't get to deduct the whole thing. If your bedroom is also your bedroom, it's not a home office. If you sometimes use something for business, that does not count. There is no kind of business expense. There is one thing the IRS hates most. It is gray areas. False deductions don't just get denied. They raise some questions. Now the IRS gonna be looking at your income, your records, your other deductions, your classification as a business. And that's how one stupid deduction turns into a full review. So listen, TikTok finance gurus always be peddling about deductions. No, you don't start your own LLC and deduct your own shit. That's not how it works. All right, let's go. Number 3, mixing personal and business finances. This one is like less flashy, but this one might be the most damaging. Listen, if your personal and business money are mixed together, you lose clear records, credibility, legal separation. From the IRS's perspective, the question becomes, is this actually a business or is this just a personal activity with income? Once that line gets blurred, well, deductions get denied. Expenses get questioned. Your records are considered unreliable. And if you're an LLC, mixing finances can destroy your liability protection entirely. This is the easiest fix, okay? One personal account, one business account. That's it. If you don't do this, everything else becomes harder to defend. Why? Once again, the IRS hates gray areas. If your money's all mixed up within each other, who knows where is going where, all right? Are you spending business money for personal expenses? They don't fucking know. All right, number 4. Yes, self-employment tax exists. It's 15.3% on net income. 12.4% goes to Social Security. 2.9% goes to Medicare. And yes, even if you barely made money, you still have to file it. Because the danger isn't the tax itself. It's what the tax signifies when you skip it. Not paying self-employment tax basically tells the IRS, hey, you might not be understanding your obligations. You might be underreporting. Your records might be incomplete. That's how scrutiny escalates. Listen, the IRS is not some evil enterprise. They don't give a shit. They're procedural. If you file correctly and on time, they usually leave you alone. If you don't, now you're on the radar. All right, slide 5 is where people lose entire games. Not putting shit in contracts. Listen, the person who creates something, own it. Not the person who paid, not the person who published it. Payment does not equal ownership. If you do not have a written contracts that explicitly transfer rights, you don't own the art, You don't own the music, you might not fully own the code. Verbal agreements do not protect you. Discord DMs do not protect you. And when money shows up or somebody gets mad, they can claim ownership and shut your shit down. Because here's the IRS angle. If the IRS asks, who owns this IP? You need paper. No contract, you don't got no proof of ownership. You don't got no proof of expense legitimacy. You don't got any defenses for this shit. So they can just file a DMCA takedown on your shit whenever they want to because you using their content. So yeah, none of these mistakes happen because people are evil. They're just sloppy. Some indie devs run businesses on vibes. The IRS doesn't hate you. They don't care about your video game. They just want paper, numbers, deadlines. If you do shit on time and properly, they will not fuck with you. That's it, okay? They got Al Capone, all right? Because why? He didn't file his shit. So yeah, like, comment, subscribe. See you guys next time. Peace out.